Did you know that GIC rates in Canada are at record-breaking highs? If you're looking to secure your financial future, there's never been a better time to invest in guaranteed investment certificates. These high GIC rates won't last forever, so please don't miss out on this opportunity before it's too late. In this video, I cover why is now the best time to invest in GICs, the benefits and risks of GICs compared to other investments, and how to get the best GIC rates in Canada. For those of you who are new, I'm Amina. I'm an investment banker with 12 years of experience and a qualified accountant. So why is now the best time to invest in GICs? I serve on the board of a few companies, and a major topic of debate has emerged. Why should we invest in other opportunities when GICs are offering a guaranteed return of over 5%? In the current high interest rate environment, GICs have gained popularity as their rates have reached levels not seen in over 15 years. In 2021, GIC rates were below 0.5%, but they have now surged to over 5%. GIC rates are linked to the Bank of Canada's policy rate. So when the bank increases interest rates, GIC rates also go up. This high interest rate environment won't last forever. With inflation stabilizing and the fast interest rate cut in June 2024, GIC rates will decrease following future rate cuts by the Bank of Canada. As Winston Churchill said, "I never worry about action, but only inaction." So don't miss out on these high GIC returns while they're still around. So with that, let's start off with understanding what is a GIC. A guaranteed investment certificate, or a GIC, is one of the safest ways to invest your money. You lend your money to a financial institution for a fixed length of time and typically receive a guaranteed fixed amount of interest plus your initial deposit back at the end of the term. So for example, if you deposited $10,000 into a 1-year GIC with an interest rate of 5%, you will receive $500 in interest at the end of 12 months, plus your $10,000 back. So what are the benefits of investing in GICs? The most notable GIC benefit is that it is extremely low risk, because the actual money you invest is not at risk of being lost, unlike stock investments. You are guaranteed your money back. It is insured by the Canada Deposit Insurance Corporation, or CDIC, a federal government entity, for up to $100,000 per individual per insured category. This means your money is protected by the Canadian government, even if the financial institution goes bust. The insurance covers deposits, GICs, and other term deposits. So for example, if you have an RRSP portfolio with 20K in GICs, 90K in term deposits, and the rest in stocks and bonds, your eligible deposits are the GICs and term deposits, totaling to 110K. So 100K of this amount is insured. You would get a separate 100K of protection for your funds under each of these categories. So you would get 100K of coverage for your TFSA, and separately another 100K of coverage for your RRSP, with a total coverage of 200K. The other point to note is that the protection is also by each member institution. So for example, if you have 100K of GICs in your Quest Rate RRSP, and then another 100K of GICs in your RBC RRSP, then each of these accounts is separately insured for 100K, so you get 200K of insured money. I will link the CDIC webpage below so you can understand which of your accounts are covered. Number 2, your money has a guaranteed return. You know exactly how much you will receive when the GIC matures. There is no volatility. This isn't the case with stock investments, where your returns are volatile based on market performance. So what are your options when investing in GICs? There are different types of GICs designed to help you achieve your unique financial goals. The most common form are fixed rate GICs that offer a fixed rate of interest over the chosen term. For example, if you deposited $10,000 into a 1-year GIC with an interest rate of 5% per year, You will receive $500 in interest at the end of 12 months, plus your $10K back. You also have variable rate GICs that carry more risk than traditional fixed rate GICs because the interest rate is tied to the Bank of Canada's policy rate. This means that the interest you earn can fluctuate, increasing or decreasing based on current rates. For both fixed and variable rate GICs, you have options on how locked in your money is. First, you have non-cashable GICs that lock your money in for the entire term, meaning you cannot get your money out should you require it. You may have to pay a high penalty for taking your money out early, and in some cases, you may not be able to take it out at all. You also have cashable GICs that allow you to take your money out before the end of the term without any penalty. The interest you are paid is calculated until the day you hold it. To have that added withdrawal flexibility, the interest rate is slightly lower compared to non-cashable GICs. So what are the risks of investing in GICs? There aren't many risks attached to investing in GICs, which is what makes it great for conservative investors like myself. The main downside with non-cashable GICs is limited liquidity. However, you can still get around that with investing in cashable GICs. So how do you choose the best GIC? There are many options to consider when you're thinking of buying a GIC. Number one, choose a term that fits your time horizon. You can choose GICs for anywhere between 30 days for up to 5 years. Number two, decide if you want to lock in your money. Is there a chance you will need your money early? If so, invest in a cashable GIC. Number three, choose between a fixed or variable rate GIC. I go for fixed. Number four, decide if you want to set up a GIC ladder. You could buy GICs that mature at different times. So for example, if you have $5,000, you could put $1,000 into a 1-year GIC, $1,000 into a 2-year GIC, and so on. That way you would have $1,000 maturing every year for 5 years. If you set up a GIC ladder, you have the flexibility each time one of your GIC matures. You can either reinvest it in another GIC or use the money as you wish. Now that you have these questions answered, how do you go about investing in a GIC? You can buy GICs online through most financial institutions. I have invested in a mix of cashable and non-cashable GICs through both Questrate and RBC. You can sort your selection by highest interest rates. Make sure you shop around to compare interest rates. A final tip, I use cashable GICs when I'm uncertain about the stock market's short-term movements, and I don't want to invest my money immediately. This way my money earns a return instead of sitting idle collecting dust in my investment account. There is a quote, start where you are, use what you have, do what you can. Please act now whilst rates are still high, and don't miss out on this opportunity. Or say someday this year, I'll get around to it. Are you planning to invest in a GIC? Do you prefer cashable or non-cashable GICs? Let me know in the comments. Thank you for watching.